So it's official, 1.75 is the interest rate that the Bank of England have now enforced. What does this mean for you, and what does this mean for all UK landlords? Let's go find out. Hi everyone, my name is Simon Misiewicz from Optimised Accountants, and in this video we are going to be focusing on interest rates. What is the interest rate right now, and what does it mean going forwards? Well, one of the big announcements was just made was that the Bank of England interest rate has now moved up to 1.75%, which is quite a significant increase. And that is pretty much copying what the United States have done. What both countries are trying to do is combat inflation. And the only way to combat inflation in their eyes is to increase interest rates, to make things more expensive, which then should curb the spending on products and services, therefore bringing down inflation and bringing down prices. There is criticisms already for using this policy in the United States, saying it's the wrong way around. They're already heading to recession. By increasing the interest rates could put pressure on the companies at large. That means that it's going to be a greater number of redundancies. Please do share with me what you think in the comments box below and what you have heard. Again, it doesn't matter if you agree or disagree with my views. It's important to share your ideas. So please go ahead and drop your comments box below. Okay, so mortgage interest rates and more importantly, bank of interest rates are now 1.75%. The mortgage interest rates will follow instinctively. So if you're getting a mortgage, now is the time to get onto the bandwagon, buy a property as soon as you can, if you are going to be buying a property, that is, and then trying to fix that mortgage interest rate. If you are looking to refinance, again, do focus on maybe looking to fix that rate for a good period of time. We can only see interest rates going up, and that has been widely reported that the United States will be looking to review their interest rates again in September. It's been announced again just this week in the UK that interest rates by the Bank of England will also be reviewed. Let's just have a look at what's been said out there. The BBC, the Bank of England has hiked interest rates from 1.25% to 1.75%, the biggest rise in 27 years, as it battles to curb rising price of energy, food and other commodities, which is basically the inflation. Where inflation is way above the target of 2%, I reckon it's about 9% currently, which is significantly higher than what everyone wants it to be. The Guardian has said analysis by the LNC mortgages found the average lowest 2 and 5 year fixed rates were 3.46% and 3.5% respectively. That's up sharply from January when the figures was 1.34% and 1.55%. That's significant, guys, isn't it? If you think about this, if you're looking to get any type of mortgage, the interest rate will increase. So if you're looking at variable rate, well, that's just going to increase further and further as time goes by. So it's really important, even though the fixed interest rates have gone up, it's probably still a better idea to fix them as soon as you can. Landlord zone. So it would be wise for applicants to prepare for mortgage rates of about 4 and 5%. Come on to that in a second. Lee says talk of a property crash is also misleading because the unnatural growth in the market created by cheap mortgages, along huge competition for limited stock, pushed up prices by 20% in some areas. And that correction is bound to happen. Now, my view, interpreting this, we have to remind ourselves, a long time ago in 2007, 2008, where there was a property crash, was caused by banks just crazily giving out money to people that really couldn't afford it. The affordability checks wasn't being performed. Merrill Lynch went bust. Other banks went bust. Northern Rock in the UK. And as a result of that, the mortgage crisis happened. Property prices really crashed significantly. I'm sure many of you can remember that. In fact, how many of you have been affected by that property crash? Please type in your comments in the boxes below this video. Again, just to remind ourselves, unnatural growth. It was based on the fact that banks were trying to push out. We are not in unnatural growth. We are natural growth, in my view, into the property prices. Property prices are steadily increasing, but they are increasing aligned with inflation, and they are increasing along the line of wages and salaries. So it's not unnatural from that perspective. But what it does talk about is fixing those mortgage interest rates again, because the forecast is that interest rates could be 4 or 5%, which could be devastating for you paying mortgages on a variable rate. Tell me, guys, what do you think interest rates will be? Do you agree with the Bank of England that they should indeed have increased the interest rates to the way that they have done? Please drop in your comments right below this video.